Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 11th of the 11th. All right, happy Remembrance Day for those old diggers. Now, let's just have a look what's happened here. The pretty massive US CPI numbers, right? So I went through this yesterday. The CPI, the forecast was 5.8%, and for the core number, 4.3, right? The print of 6.2 in particular is like, that's alarm bells, right? The Fed, as much as they're saying this is transitory or whatever, they're going to start managing this. Otherwise, it's going to be 10% and they'll still be second guessing themselves. So what that does is it brings forward the potential for interest rate hikes, right? That has seen the treasury yields go up again, as you'd expect. And I mean, this is pure vanilla trading, good markets. Equities get hit straight away with the prospect of higher rates sooner than later. And you have a bit of a risk-off situation where the dollar block gets belted and the dollar rallies, right? You can't get it easier than that to read what's going on, right? The dollar index was looking like it was done. And I've been saying over the last few days ahead of the CPI, unless this number is a massive print, we are going to see the dollar, I think at medium term, it's topped out. What we've got now is a situation where we're seeing new fresh trades being put on, right? Fresh long positions on the dollar. Now the Aussie's banging up against support trend line down here around 73 the figure. Kiwi's broken down through a couple of levels here as well. Now bear in mind, we are anticipating a 0.5% potentially interest rate hike from the RBNZ at some point in the not too distant future. So the Kiwis are getting cleaned out on the downside there as well. So that's where we are. And we just come back to the numbers. We had some employment numbers out of Australia, like 5.2%. That's not very cool. Like the numbers weren't great, right? This is like bull to a red rag. I'll be looking to sell Aussie probably on rallies at the moment, but are we going to get them? I don't know in the short term if we are. I think we're going to see I thought with the dollar move, okay, coming back to the charts, I thought, you know what, slightly stronger numbers. We're on track. We're sticking to the plan, the Fed's plan, all this sort of stuff. But this blows that out because of the massive number. So it blows the dollar, the whole trade that was coming up, which I would have thought, you know what, the dollar topping out, Euro, Sterling, Aussie, Kiwi, get a bounce and all that sort of stuff. But the numbers blow everything out of the water because it potentially changes the Fed's plan. So look at the reaction here on the dollar across the board, dollar index cruising up. This is you've got great direction here, right? There's no reason for anyone to get this wrong at the moment, right? Now, we're talking, 10, 12 hours after the actual data's come out. So it's a little bit tricky from here, 15, 16 hours. So if you've missed it, you've missed it. You're either looking for retracements or the next leg of data. If the next round of US numbers, and we've got a month of data here now coming out the next couple of weeks, if any of these US numbers are showing strength, well, they're going to have to start doing something, start moving quickly. Right, so what do we got? We've got clear dollar direction, right? That's what we do have in the market at the moment. So this is a great situation to be trading from. We've got a bunch of UK data today. Now, ideally, what you want is the current move in the market, in this instance, sterling down, you want that move to continue. How do you get that? Well, you want these numbers to come out weak, right? And that drives sterling even lower on top of the really strong US numbers, right? And this is the way you got to look at all these things. So the Aussie, now hasn't really run away to the downside, but what you'd be looking for there are weak numbers. And you've got some. So that supports the current direction. Momentum is all downside. You come back, look at the Eurozone industrial production numbers. Once again, we're looking for weakness. Any weakness in these numbers should be an easy trade to get into and just take some cash out of the market. And that's pretty much it, right? You come into like today's trading, there's not a hell of a lot coming out. Friday as well. University of Michigan sentiment numbers. Well, that's the end of Friday. Mate, if they're strong, we're going to close the week on a very strong note. And that gives us something to work with, particularly either not just this week, but next week as well, right? So on the overall move, as I said, this is pure sort of markets, really strong US inflation numbers, higher inflation, right? Potentially higher rates. This is where all your understanding comes into play. That is an immediate impact on the equity markets, which is pure. Treasury yields go up, the dollar rallies, and the dollar block falls. Now, as I'm saying, I keep repeating this because this is like really normal market conditions, and we haven't seen it for some time. So it's like just such a relief to see the market performing as it should, right? Now, the dollar move, it's actually moved a fair way, right? So you'd think there'd be some sort of profit-taking retracements before the weekend. So don't just rush into the trade. Think about it. The trade for the CPI numbers is almost over, but there are opportunities that flow on from this. As I said, looking at those other data releases like UK, Eurozone, Aussie, Kiwi, you get weakness on those numbers now. It goes with the strong US numbers. It's an easy trade to the downside. All right, guys, that's it from me. Today, so I should just come back through. Once again, we've got a whole range of data coming out here in the UK. Now, there's a cartload of things, right? Manufacturing production numbers, the output numbers here are a big part of the puzzle. Keep an eye on those GDP estimates as well. So there's plenty coming out. You want to see overall uniform weakness across all numbers to get that pure trade. If you don't, we're going to see it sort of just flush about or flap about a bit for the rest of the day. But sterling crosses are going to be your go-to today. All right, guys, have a good one. Cheerio.